clinic imefunguliwa. Leo kwanza tumeiosha na tumesanitize. Bench tumeweka nje kama kawaida. We are ready for you. Financial Clinic. Today we are looking at common money questions that people ask. And so, you know those common questions we keep asking over and over again. So if you have a question for us today, 20316 is the SMS line. WhatsApp number is 0786 316 316. This morning we get to hang out with two lovely people. First and foremost, we have financial literacy trainer and coach at Pesa Savvy. This is Juliet Odhiambo. Juliet, how are you doing?
I'm very fine. How are you this morning?
I'm very fine. Karibu sana.
Asante sana. It's such a pleasure to be here.
Awesome. Do you also ask Mary a lot of questions over this season?
Not really. I actually have a feeling she kind of knew. You know, over these things. She had an idea.
She had an idea. Karibu sana, good to have you. We also have Gilbert Angana. Gilbert Angana is a financial consultant and coach. Leo niko na makocha hapa. Gilbert, how are you?
Very well. And you?
I'm very fine. Karibu sana.
Asante sana.
I like those colors. Those are your colors, my friend. Umetoklezea, my friend. Hey, umetoklezea, let me tell you. Looking nice.
Thank you very much.
Great.
You also look nice.
Asante. So, common money questions that people ask is what we want to look at today. And I'm sure people will have a lot of questions to ask. But one of the questions that a lot of people ask is on issues budgeting. And what does a realistic budget look like? Because we always hear budgeting. I don't think you can have a discussion on money and the budgeting. The B word does not come into the picture. So I'll begin with you, Juliet, because my mother taught me ladies first, and I know she's watching. What does a realistic budget look like? And should everybody really work with the budget? Hata kama kamshahara ni kadogo?
First of all, I'd like actually to answer that question with the negative of realistic. Like, what does an unrealistic budget look like? I'm one of those who push the message that personal finance is personal. So even your budget needs to be personalized. It needs to look like who you are. It needs to look like your life, you know? And so an unrealistic budget is one that doesn't reflect you. You know, we have all this, and we are guilty as advisors and trainers. We give people certain ratios they need to maintain for certain expenses. But what that happens is that people find themselves in this box that they are not able to maintain. And to be honest, that's why people struggle with budgets. So you feel like if it's not at 20% of savings or 10% of this, then I'm failing. And so before you've started, you've stopped. And so a realistic budget looks like one that reflects your spending plan, because people hate that word budget a lot. Use the word spending plan. It's your money. Learn how to spend it, or make it reflect how you want to spend it. So when you want to, what you need to start by doing is acknowledging, this is how my life looks like. This is the areas I spend money on. And then I'll create a budget along that, because it's now reflective of you. Once you've decided these are the spending habits that I have, this is where my money goes, then create a budget after that. When you link that with your future goals, then now you can see where can I cut off, where do I need to increase, like that. So now it's based on your lifestyle, but it's also based on your goals. It's reflective. So that's what really makes it realistic, and that's what really encourages people to maintain one. And makes people really hate this idea that you're being constricted, you're being tapped up in a place that you can't control. Really make it reflect your own lifestyle, reflect your own spending, and then shape it every so often, depending on how things are changing, because it's really a tool that's supposed to help you and not to suffocate you. It's realistic when it's reflective of your life.
Okay. Gilbert, I once had somebody say that, everybody who spends money has a budget, whether they know it or not. It's just that some are deliberate about their budget, others are oblivious, but it is still there. I don't know what you have to say about that.
And you're correct there. And one of the things that for me, I will say, there is this old adage that says, not planning is planning to fail. And I think that's the essence of even financial situation, because whether we plan or not, we end up spending money. So the idea is, if you're able to plan in advance in terms of some of the key areas of your spend, what happens is then you become now conscious of your spend. And you're able now to really see some of the basic things that you need to be able to have in place, so that then you don't end up meet the mid of the month, especially when you're employed, you find that you don't have any amount.
Yes.
And there are basic things that you can actually have. For example, from a budgeting perspective, they're usually the normal things that somebody needs to put in place. Number one is usually the 10% for giving or tithe if you're in a church or something. So that's basically a part of planning. So as you look at your monthly income, there is that 10% that really needs to go to giving or tithe if you're in a church. Then there's a 20%, which is also usually the basic, 20 and above, depending on how much you earn. 20 is a basic minimum that you can actually put on a savings perspective. So there is that 20% that needs to go out. So that already you have planned for 30% to go out immediately your salary comes in. Then there is what we call the home use, or the budget that people use for monthly expenditure in the house, where you go and maybe do a 1 month off and so on. So that's basically between maybe 20, 30 to 40%, depending on different families. And then you have the rest. So the rest is where now people can use for the entertainment and other things and so on. So that's basically a simple budgeting arithmetic or equation that you can actually use as a person. So when you don't plan, what you end up doing, when you don't create a budget, what you end up doing is you end up spending your 10%, your 20% that is supposed to go for giving and savings into other things that then becomes part of others. So that's the essence of why budgeting is important.
Okay. Juliet, there's people who have the notion that what I have is barely enough. My money is too small to be budgeted. Wewe unaniambia mambo ya budget hapa, and me, even what I have is not even enough for my needs. I don't want to hear about budgeting because it's not helping me. It's making me more miserable because I have so many needs and I have so little money. So maisha iendelee tu. What would you tell such a person? Yeah.
That's really unfortunate, because the thing about budgeting, it's really a discipline thing. It's a mindset and discipline thing. It's about, hata kama ni kidogo, I'm being responsible of this little one.
Yeah.
Because what you do with 1,000 shillings, you will do with 100,000 shillings. And so if you're not planning for even that 100 shillings, you'll find that same behavior replicating, pesa ikiongezeka. So if you're hoping and praying, which a lot of us are, that our financial capacities are going to increase along the way, then we need to start building habits and disciplines that are going to enable us maintain that increase. Yeah. So it's not a question of pesa yangu ni kidogo. It's a question of do I value pesa yangu kidogo? Do I value it? Do I plan for it? And then as it increases, that same discipline and consistency goes on. Yeah. So problems come when you have the 100,000 shillings, like in your plan, you don't have a plan for it. So it just disappears along the way. And it's because you didn't start. So even children can start being taught how to budget, because those are skills that are inculcated as you grow up, the behaviors you see. So it doesn't matter the amount, it's about a value of that resource, and then making a plan for it.
Okay. But another common thing we are told, jumping from that place of budgeting, we are told about investing, and it's good to invest. And the question then would be, what are some investment options available for low-income earners? Because one of the common things I hear is, I don't even have enough to invest. And some people say, my friend, there are places you can invest with as little as X amount of money. So what options are available to invest for low-income earners?
Okay. So first I want to start by giving my own personal example from an experience perspective.
Okay.
When I started working 16, 17 years back, on commission as a salesperson, then I used to earn between 15 to 20, sometimes based on commission, you earn more. So one of the things that the discipline that I inculcated then was to actually ensure that I save a minimum of 3,000 every month into an account, a savings account.
Okay.
And that's where I want to start, because for you to move to a space of investment, then there has to be some level of savings that you have. You can't just jump from you're earning to investing, then, I mean, you'll somehow get mixed up along the way. So there has to be some element of the discipline around savings.
Yeah.
And that's the first place where you need to start. And there are various modes of savings. You can save in banks, you can save in insurance companies. Some of the microfinance institutions have saving plans. So there are various options of, first of all, saving money to a substantial level. Then when you're looking at an investment perspective, and today with the digital technologies that are around us, I mean, you can invest from as low as possibly even 30, 20, 50,000, based on how much you have actually saved over maybe a short period of time, depending on the discipline around saving. So the investments options are actually many, and today the minimum investment amount is actually as low as 20, as low as 30. Some most of the insurance companies now are able to allow you to invest in unit trust, in money markets from as low as 50,000. But the first step is for you to be able to build a base of savings that then you can be able to plug it and move it into an investment arm, regardless of how small it is at that particular time.
Okay, Juliet, anything to add to that?
Yeah, I love what Gilbert has said, but the funny thing is, as even he talks about 20,000 shillings, I'm like, I have clients who 20,000 shillings is a lot already.
Yes.
Still.
Mm-hmm.
But I want to rally on the unit trust that he talks about, because unit trusts are a good way, an entry level for low income investors. What unit trusts have done is that they've allowed you to invest in bonds, in stocks, in all these things, but in a kind of a low level, entry level capacity. Because when you find how some of these unit trusts are structured, some will allow you to put 3,000, 5,000 shillings, but the idea is that you need to do it consistently.
Yes.
Yeah. So when you want to start seeing a change, start doing it consistently. Don't put 3,000 today, next month you may sahau. And that's where why savings, starting with savings is important, because then it builds that capacity for you putting away money. If you don't have the 20,000 that Gilbert might be talking about, is you save towards that 20,000. And if you want to start, because you can also save and invest at the same time. So the unit trust now offer you, I want to invest in stocks, but I really don't know where to start. When you go to a stock fund, a unit trust that's specifically dedicated to stock, you see your money behave how it would if you invested in the stock market, especially. Fluctuation is very, very, very common because it's the nature of stock.
Yeah.
If you want to do bonds, go to a bond fund. If you want to do a balanced fund, do one that has mixed stocks and bonds. And so that allows you even to see and imagine how investment works. Even the stock market itself now, because the thing with unit trust for stocks is that they won't allow you to say, I want to do Safaricom or KCB or this or that. It won't allow you to do that. But even with the stock market itself, if you want to go in yourself, you can do that, 1,000 shillings, 5,000 shillings, and identify the stock you want to buy. It will say the minimum, you can only buy 100 shillings, 100 shares at any given time.
Yeah.
So if you find one that's about 40 bob, 50 bob, you'll see at one point you can actually buy shares worth 50,000. Yeah. Again, the discipline there is to continue doing it so that you build yourself a portfolio that now you start seeing benefit of it over time, especially with the stock market. You want to allow it to do what it does, give it time so that you can start reaping the investments out of it. But it's very important to start investing in 3,000, 5,000 shillings, or save a significant amount and then buy a bill for 50,000 shillings or a bond for 50,000 shillings. Still, the options are very much available.
Okay. Gilbert, maybe because, like you said, talking from personal experience, talk to us a bit about the aspect of discipline and patience. Because I find hapo ndio kuna kuwaga na changamoto. When you talk about starting at that point of saving, that discipline of every month putting 3,000 bob aside, and even whatever avenue you decide to invest in, it's not like after 3 months you'll be a millionaire. But we live in a world today where we want instant gratification. I think that's why
money.
a lot of people are betting, because ikitoka inachomoka yote. I don't have to wait for 6 years for this investment to mature. Hakuna kitu kama hiyo. We want to redeem time. So talk to us about discipline and patience, my friend.
Yeah. So I think one of the things around financial situations, and just like any other aspect in life, is discipline important. And for me, I think I learned this discipline based on my family upbringing. Just looking at some of the situations that we went through, and one of the things that came into mind is I didn't want to go through that situation again with my family. So that discipline automatically came into me in terms of I needed to first of all start saving whatever small amount, regardless of how much I earn. That discipline that I inculcate in myself. So that's how I started. And as I said, when I started as a salesperson, I was earning on commission. So sometimes, depending on how you perform, you will get lower. But one of the things that I inculcated in myself is the discipline of at least saving a minimum of 3,000 every month, regardless of how much I earn. That way, then I end up now pushing myself to work hard at the end of the day, so that then I'm able to really sustain a minimum income that I can be able to earn to ensure that I save the 3,000. So over time, as I've been growing through the different tracks in the corporate world, my savings have actually been also increasing with the same measure over time. So over the last 17 years, my discipline on saving has been, every time I move to a different position and I'm earning an additional amount, my savings increased. So I've been able then to have opportunities where, there are opportunities that pass you by because you don't have cash. So as a result of my savings, then there are opportunities that come in and somebody say, I'm selling this particular land, and I need cash. If you want to go through the bank process or what, then I'll sell it to you at this amount. So you end up having at least some disposable amount that you can really ensure that you take advantage of those opportunities that come in quicker. But the discipline around it is you must be able to ensure that you have the discipline of savings, regardless of how much you earn. There's a gentleman that I'm coaching now, and he's actually a businessman. He earns 3,000 every day. So the discussions around me and him is, how much can you save that will not distort your daily operation? And this gentleman is saying, I can save 500 every day. And I say, cut with that. If you can save 500 and it will not distort your daily operation, save it. Start with that 500, build it up. Then after a certain level, as we say, transfer it into some investment opportunities where you can now be able to generate some additional income. And that's how then you build your savings fund in a way that over some time, maybe you look at it 2 years, 3 years down the line, you surprise in terms of understanding that you have actually amassed all this amount of money as a result of the discipline that you've inculcated throughout the period. So it's not a one-off thing that now people want to say, now I want to save, and then within 6 months or so, I want to invest, and then I get this huge interest. No, you have to have that discipline. You have to walk the patient. You have to be patient to walk the talk, and actually see your money growing over time. And that's the aspect that many of us as young people also are missing, that patience to see it grow.
I love your story. I love that you've been saving and you keep saving 17 years. That's a good one. And also saving towards something, because I can guarantee you, my friends, December ndio hii. Piggy bank lazima zivunjwe. Tuambie mwili pole. It's been a harsh year with COVID and everything. And I can guarantee you there are people who've been saving, but this December, lazima tuende tukaogelee huko kwa maji ya chumvi. So we break our banks, remove our savings, and January si tutaanza tena. Si January ndio ya New Year resolution. We'll come up with another resolution. Juliet will come up with another resolution to save. Alafu December, then the cycle begins again. Anyway, I have several questions that are coming in here. We'll answer them shortly. You are on the Financial Clinic. Common money questions that people ask. We are hanging out with financial consultant and coach Gilbert Angana, and also financial literacy trainer and coach Juliet Odhiambo. Questions on 20316, WhatsApp 0786316316. Juliet, listen to this one. Says, good morning, pastor and coaches. I've been in business for 10 years. It's been profitable. However, there's a large amount of money I expect, and I would like to diversify my investment by investing in a different sector than the one my business is in. where do I begin to identify an area which I can carry my business experience and knowledge about money that I already have? By the way, this existing business is based on passion, but a change is as good as a rest, so kindly advise. They haven't talked about what business it is, but I just want to diversify. What would you tell them? Where do they begin?
It's okay. Two ways to look at this. I'm not sure whether he meant he wants to invest in another business, in another industry, or because that's, if that's what he's trying to do, then he needs to identify an that he's seen or experienced, because he says his current business is out of passion. So one of the things he can try and do is identify a potential need that he can see in whatever location, and then or use his professional experience, which can also help diversify. However, the thing about diversification is why we do diversification is so that we can spread out our risk. Yeah. And so the business, him being in business, it's already a very high risk investment. So businesses generally are high risk because it can do extremely well, which it has done for him. Good kudos on that. Or it can flop completely. So what he can do is try now look for a bit another kind of investment that can balance him out. So possibly looking at things like treasury bonds or bills, especially if it's a huge amount that he says he's expecting. That's a good action to take it, where it's a bit safer but can also give him good returns. And so I would say it would balance him out. So he can diversify by spreading out the risk, look for a less riskier investment, or diversify if he's looking for an industry, then he wants to go maybe also in a less riskier industry. But businesses in generally tend to be very high risk. So that's one thing I would advise. Look for a more low risk but good return, which bonds fall into, and some of the unit trusts that we've already talked about. That would help him to balance and reduce his general and overall risk. Okay.
Gilbert, this is a common narrative, and I'm sure you've come across it, where people say, I can get 30,000, Bob. What business can I start? I can get a loan. My limit for the loan is 200,000. What can I do with 200,000 that can give me returns of 20,000 a month? I see a lot of such questions, especially on social media, and I keep wondering, is that really the best way to approach these money issues? Gilbert.
Okay, so first, I want to say that you don't start with money then move to business. I think it's the other way around, in terms of you must have an idea in terms of the area that you're passionate about, the area that you feel that this is an area that you can be able to do well, and you've done your research around it. Because one of the things that people do is, even on a small business, whether you want to open a kiosk close to your neighbor kiosk and so on, there has to be some level of thought that you must be able to go through it, in terms of, if you open a kiosk next to another one, are you sure that you're going to generate the income that will then will help you to actually recover your capital expenditure? So I think it's the other way around. So if you're a person who is having that conversation and saying that you have 30,000, you can get a loan of 200,000, I think you need to think through the other way around in terms of understanding, what is it that I want to do? What do I require? What is the investment that will be required there? How will I be able to recover my money based on now some of the things that are happening in that sector? So that way, then it will help you now to understand that this is the amount that you need to invest. And sometimes you might not have the full amount to invest in that business, but you can start with whatever you want to start, because you are clear that you have done your small research around it, and you're able to ensure that you move the pace to somehow recover, reinvest, and then continue expanding your portfolio of business. So I think for me, I would say it's the other way around. First of all, think through, what is it? There are many businesses that you can actually be able to start, but it has to come actually from you in terms of the area of interest.
Yes.
Because for me, I will say, for example, my area of interest might be, all of us have different area of interest. So when I want to start something, then I have to think through it deeper. And then now I invest whichever amount that I want to invest in it. But you see, now I've thought through it, and I'm able to walk the journey towards reinvesting as I expand my portfolio.
Okay.
So don't go fast to get the loan, because you get the loan and then you start thinking about the business. You won't be able. In fact, there'll be too much pressure because the bank will require you to pay every month. Yes.
And many times, by the time you're settling down to an idea, half the money is gone. You've used it on other things, because my friend, when you have money in the pocket, the needs will arise. Mina kwambia, needs will come from the woodwork. Juliet, the other thing we keep hearing about a lot is build an emergency fund. You should have an emergency fund. I think when COVID hit, that was one of the conversations that was everywhere. People losing their jobs, people talking about, hey, now I need to know. I realized the importance of an emergency fund. So question is, how does one build an emergency fund and how much money should I have in it?
All right, so the first thing when you want to build an emergency fund, of course, is determine how much I'm trying to build. And usually there's a recommended 6 months, but based on my experience, it depends on what kind of job you are in or what industry you are in. So there are some people who, when they lose a job, they can get another one very fast because of the kind of job they do, or they can get in 1 or 2 months, maybe a doctor can get another job, or depending on what industry you're in. But for some of us, it might take us a much longer period. So for some people, I would say 6 months or plus of your monthly expenses. So of course, the first thing you want to do is determine how much, and you do that by determining what are your monthly expenses. Which is what do you use, what do you spend money on every month? Because what you're trying to do is to keep yourself, especially when you're saving emergency for loss of income, because there are many other kinds of emergencies that come, but the main one about here is in the event you lose income. So you want to make sure you are very clear about what you spend on a monthly basis, and then multiply that by the number of months that you feel comfortable, especially in your industry. So that could be from 2 months or 6 months, or I have a client who's gone all the way to 18 months because some of these things also psychological, And so what you've done when you have a number, and then now you start saving towards that. And we talked about the discipline of savings. One of the reasons why in discipline is because you're not saving towards something. You're just saving. You're just putting money away. And like you said, if you have no plan, a plan will come. It will develop. So you want to be very clear. I'm saving towards an emergency. I'm saving towards investment. I'm saving towards ABCD. And so when you're doing emergency fund, you start now saving towards building that fund until it reaches the X number of shillings that you set out. And so now determine a place where you're going to be putting this money. And often a money market is a good place to do it because it's easily accessible in the event of an emergency, which is where which is what you want to be able to do. And there's an emergency, you want to be able to reach out to it fast. So don't go and lock it somewhere where an emergency has occurred and you can't access money in a year. So those are the 3 things I would say. Determine your monthly expenses, multiply that by the number of years that you feel you can get another income, and then now determine where to save it and start saving towards that particular emergency fund.
Okay, great. There's another question here related to marriage. We just got married, both of us are working. How do we divide up the finances? Gilbert, ebu saidia hawa married couple kabla wamalize honeymoon.
So one key thing is, finances is actually one of the highest issues in marriage. And from even a personal experience myself, it's actually one of the issues that can actually result into a divorce in any situation. So the earlier you start in terms of money discussions, the better. And the easiest way that you can start with, and I know especially for new couples that are coming in, first of all, you have not known each other well that much to trust each other on finances to some level. So the easiest place is not, first of all, when people talk about having an account where all your incomes comes in, for me, I will say, first of all, start with a joint account where you can save together, and not necessarily where your income actually comes in together. No, your income can come in different spaces. I think the whole idea is for you to be open and discuss that this is my income that I get. Discuss openly with your spouse, so then it's very clear. and then agree on how much money each one of you will be putting on the savings joint basket, depending on how each of you earn. So if you have higher capacity of earning, then it means that you need to put more. If you have a low, then somehow, so that then it does not distort your normal operations in the family and so on. So that's the first step that you can actually go. And as you say, the conversation here is about, first of all, building your savings, then moving to an investment opportunity that is more reasonable and really reflects your risk appetite as a family. So I think that's the first place, that depending on how much you earn, put a joint savings plan together and start from there. Regardless of the amount, start from a joint savings, then build it up into an investment avenue. And over time, then you'll be able to see that you're able to have now proper discussions around money as you mature through your relationship.
Yes.
And then you can be able to look at other high risk areas to invest with the savings that you built up.
Okay. Question here, Juliet, you can take this one. Is it better to save in a bank or in a SACCO?
Well, it depends on what you're trying to do. I would say both are actually okay because that's why accounts exist. But with SACCOs, there's usually a much kind of a bigger outlook you want to kind of look at it from, especially if you're in the market for a loan at some point. Then a SACCO becomes a good place to save. And then the whole cooperative environment of a SACCO really helps even for you to become good with money amongst people. Because then you find, if you find a good SACCO, because there are also bogus SACCOs out there. So you want to be able to spend time to identify a good SACCO. And then now, especially if you know what you're trying to do, there are good SACCOs that are good for real estate acquisition. There are good SACCOs that offer different kinds of opportunities for you. So the communal aspect of SACCOs is what I really love about it. And also the idea that it encourages you to build the discipline of saving before trying to get into credit. Because a lot of people just want quick money with loans and all that, but the SACCO now builds your muscle for saving and then allows you now to benefit from that discipline that you have. The savings account now, it depends now, you have to do some also window shopping about which bank is good, which offers the best services, which offers the best interest as well. So you want to try and do a bit of window shopping, be very clear about what you want to do, because I really think that's where people fail. They don't know what they're saving, what do I want to do with the money I'm saving. That usually is a good indicator of which direction to go, whether to go to the SACCO or to the bank. But first, be very clear about what you're trying to do with the money you're saving, and then you can determine. All of them will serve the same purpose. It's just about understanding the interest rate, the customer service, the opportunities that become available from it.
Okay. Somebody here says, I love the conversation. This is a good conversation. And then they say nowadays insurance companies have loss of income covers for the salaries. So I'm wondering which is a better option, to take an insurance policy on my salary or to start putting away money for an emergency fund? Gilbert.
So the needs are different. You see, when you take an insurance cover to cover in case of an emergency, that where you have lost your job, you see that's more of a different issue as compared to now when you're looking at an investment, because the other one you are covering against a risk. This other one you're looking at savings for investment. So both of them are actually, I would say, okay, depending on the industry that you're at. If you're in an industry where there is a lot of job fluctuation, where job losses are there, like hospitality and others. I mean, it's important for you maybe to get an insurance where you can cushion yourself maybe for 6 months or a year in case you lose your job. But that does not replace the savings and investment aspect. So those are two different areas that you need to look at it differently.
Okay. Somebody's taking us back to the whole conversation of bonds and unit trusts. They're saying, please explain a little bit more on this too. Juliet.
All right. Unit trust is one of those products, especially in insurance firms, that now pools people's money and invests in particular things that individuals might not be able to do. So they'll take money from Coach Juliet here, they'll take from Coach Gilbert, they'll take from so-and-so, and then they put it in a pool of fund, and then they'll say, this is a fund to put in bonds, or this is a fund to invest in stock, or this is a fund to do ABCD. And so there is that collective and pooling aspect, and then now the insurance firm or whatever institution becomes the fund manager. So they are the ones who determine, this is the bond we will buy, this is the stock we will buy, this is the ABCD. As an individual, all I have to do is take my 3,000 shillings, my 5,000, my 20,000, whatever money I have, and put in that fund. But what you just need to understand is the underlying instrument that is in that fund. Once you understand that, then you know I have a fund. I think most people know about the money markets, which is still under the trust, because that's what is really advertised a lot and talked a lot about, and also with the little money that they require to start. But now Unit Trust has money market plus all these other funds that I've talked about. It's just asking where you have, if you have a money market, go there and ask them, do you have other funds in your portfolios? Yeah. And so you'll find they'll tell you, oh, we have this one for stock, ABCD. Usually the problem is that people don't understand, oh, this is the stock, this is how stock works. And so the fund might not be giving you 8% or whatever percent consistently every year. So you need to understand, I'm actually investing in stocks, but it's in the bracket of these pooled funds. Yeah. So you need to understand the role of the fund manager, how the fund works, the underlying asset, and what your role is as an individual. Even these funds, you can still pull out. That's the thing, you can pull out whenever, at whatever point you want to, because they tend to function a lot like the money market fund.
Okay.
These are questions you can get clarity on whenever you start the conversation with the managers. With the fund managers.
My time is up, unfortunately. So 30 seconds, parting shot, Gilbert.
I think for me is to encourage, especially if you are a couple, one of the things that you need to do is get into spaces where you can learn more about money. And there are various avenues. Like there's a group called Couples and Money. If somebody Googles Couples and Money, they can be able to join in, go through some classes, and then they can be able to bring in their financial oneness. If you're an individual, look for avenues where you can be able to get financial literacy. That will help you create the foundation for your financial leadership and growth over time, so that you know the areas that you need to be patient on, the areas that you need to be able to invest on, and opportunities that are out there. So that's what I'll share with the people.
Okay, Juliet, parting shot.
It's so sad because money is one of those things I can talk about forever.
Yes.
So, but my parting shot would be when we talked about saving and why people have a problem with the discipline, I want to offer two solutions for that. One is making sure that you are very clear about what you want money to do for you. When you're unclear about that, you will always struggle with saving, you will struggle with budgeting, you will struggle with investing. So have clarity, get some help. Even that's why I usually start with clients. Get clarity about, I have this money, I want it to do this for me.
Yeah.
Once you have it becomes accountability for you. Because I want to buy a home, I want to do this, so I must save, I must invest, I must do that. You become your own accountability person. The other person that can offer accountability is friends who have similar vision that can push you on in the same direction. And then the other person that can offer accountability are coaches and people who are there to steer you on. When you have someone you always come and talk to about the decisions you have made, then that always rings at the back of your mind. Yeah. So put like a board of governors around your money, like be intentional. You'll find that you actually develop that discipline towards the things that you're trying to achieve with your money.
Awesome. Juliet and Gilbert, thank you so much for your time this morning. We are grateful for your wisdom. Aya, my friend, clinic imefungwa. Madaktari wanataka kwenda clinic zingine. They are very busy people. But we are grateful they started the day with us today. Thank you for being a part of the Financial Clinic. God willing, we'll get to do this again next week. Have a great day.
Thank you for watching. Remember, subscribe to our YouTube channel so that you can get notified whenever we upload new fresh content every day. Stay tuned and enjoy fresh, uplifting content.